My name is Ozzie Jurock. I am the host of OZZIE'S, and OZZIE'S is a podcast slash video slash YouTube that prides itself on interviewing extraordinarily unique, successful people. And one of those people is here with me today. His name is Victor Adair. He's the author of the Trading Desk Notes. He's a long-time stock market aficionado or worker in the stock market. I've had the privilege to be with Victor on a radio show for some 20 years. Welcome, Victor.
Well, thank you, Oz. Good to be on with you, and let's do this and have some fun.
Agreed. I mean, you are, of course, in your kind of work, you have to be very disciplined, and I want to get back to that later. But that discipline, I think, you learned on a farm.
Yes, I was born in Chilliwack. I grew up on a farm there. Also, family had farms in Revelstoke, worked there. One of the things, and people that have lived on a farm know exactly what I'm talking about. There's work that's got to be done every day. You don't leave the cows alone, on Christmas Day and tell them, you'll come by tomorrow. So yeah, you develop that kind of discipline. Now all these years later, I live in a small town on Vancouver Island. I moved here 7 years ago, really to get away from the big city. So I've been working from home, for 7 years. But I probably work now as much, if not more, than ever. I think there might be a temptation for some folks to slack off if you're working from home. You can do other things. You don't have, but I start my day usually before 5 in the morning, and I'm still puttering away at 9 o'clock at night to prepare before I go to bed. But I always make a point, Ozzie, of taking a couple hours off during the day to get outside, to go skiing, or ride my bike, play golf, whatever. Yeah, you have to have some discipline in my line of work. And part of the discipline, Oz, honestly, is just to carry on. Yeah. You run through a tough period where it seems like you can't do anything right. You just keep going.
Well, and that's a credit to you. And of course, you can say you go golfing. I mean, when people say me golf, they say I don't. I mean, what are you doing? Right? I mean, people really try to avoid golfing with me because I have a lot of other talents. Let me put it this way. Or as the former president said that, I know that I'm getting better. I'm hitting fewer spectators. Right? That's me. Anyhow, you also were working in Revelstoke, and my heart is in Kimberley, not too far, so I drive through Revelstoke a lot, and I love that mountain town. So anyways, you're a BC boy. Very few people are actually born in BC that I interview. Seems to be we all come from somewhere else. But you didn't just stay here. You also went to Europe for a bit.
Ozzie, I grew up in Chilliwack. I went to high school there. The things that I liked most in high school were history and literature. I got a job working in a mining camp right out of high school for the summer. This was off in the bush somewhere where, we would go in for 12 days at a time. You'd work 12 hours a day. There was nothing you could do there, nothing you could spend money on. So it was just great for me. And over the course of 5 or 6 months, I saved up enough money to go to Europe and hitchhike around from Scotland down to Turkey and back again over about a 6 or 7 month period. I mean, we're trying to live on 50 cents a day. Because the longer your money lasted, the longer you could stay, and you didn't have to go back home again. But for the next few years, actually, I spent all my summers while I was going to university. I worked in mining camps. That's how I paid my fee to go to university. And being in the mining camps, I kind of then, when I got out of university, and by the way, I wasn't doing mining in university. I was studying creative writing, philosophy, history, especially, that sort of thing. That's what I like doing. But when I left university, I spent the next few years in the mining business. And part of that is, it's in little places all around BC and the Yukon and back in Ontario. But I saw a lot of the American West, and I just fell in love with it. Small towns all over, whether it was California or New Mexico, Idaho, whatever. I really I mean, I traveled all over there. Ozzie, I got to say, most of the time, I didn't have like $5 in my pocket. I don't know how I stayed alive, but I did. I looked at these properties that had been producing mines, you know, maybe 100 years ago. And that was very tough times in 1974, 75. The Dow Jones had fallen in half. We had a NDP government in British Columbia that was not keen on mining, that's for sure. And but you know, you're like a kid in his, I guess, my late 20s or so by that time, and you know, life's an adventure. So it was great to see all that country in the American West.
That gives you a good background then to become a stockbroker if you actually know what you're talking about. This is what a mine looks like. This is how what people are looking for, and that gives you a better idea, I think, to make decisions for yourself and your clients, because you were a stockbroker and you held a number of trading and analytical and senior management roles in Canada and the United States. So that travel through the American West helped you.
Well, I tell you, I was mostly looking at gold mines back in those days, and the price of gold was starting to lift off of the fixed level it had been at years. And I was so fascinated with gold. With a couple of other guys, I started a gold trading company. Basically, we were selling gold. And I used to walk around with a little 2-ounce wafer of gold in my pocket all the time and say to people, you should buy gold. And those were the days when it was like $100 an ounce. And that led me inevitably, or maybe got me the opening to become a commodities broker in 1977. And then a few years later, I became a stockbroker as well. But most of the work that I did, in business, in the brokerage business, I was mostly a commodities broker, working out of Vancouver most of the time. I managed an office in San Diego for a while. Also was in Toronto for a year, and that sort of thing. But yeah, I've been primarily a commodities broker. That means, you know, commodities, but also interest rate, stock indices, and particularly for me, currencies. I've been a big fan, or a big part of my business over the years has been trading currencies.
Well, and I think you saved my bacon. You know, I'm sort of on the other side of the spectrum. I love hard assets, but my hard asset of choice is real estate. And we were very blessed to invest in the United States. And I believe about 4 years ago, I had what for me was a substantial amount of American dollars, and I was going to change them. Then I had a talk with you, and you said, no, the US dollar is the place to be. And I remember I made you a little doll, and I called it my Victor doll on my desk. And every morning I said, thank you, Victor, thank you. Now, we want to get to what the dollar is going to do shortly as well. But I think what always impressed me is if you were wrong, you said, this didn't work for me. I got out of that trade. But as I am 20 years, I think we've been on the radio together, and I'm sort of sitting on the sideline, not understanding how you can function in one day in and out of the market like this. You know, I mean, it would be very problematic for me, but I'm full of admiration. And when I look, more often than not, your idea of the trend the market was going in, what worries you, what concerned you, or the absolute common sense advice in terms of, you know, maybe putting stop loss on and so on. I always felt you had almost a prescient view of the market.
You know, Ozzie, I was in the brokerage business for more than 40 years. I worked as like somebody's broker. I've been a manager, an analyst, a portfolio manager as well. But I'd say some of the things that I learned that I apply now to my own trading. I mean, here's a line that I used many, many times when I spoke at conferences. And that was, I have seen hundreds and hundreds and hundreds of people lose millions and millions and millions of dollars. And I thought to myself, what is it that they do that I am not going to do? And I would say the most common thing really is people hate taking a loss. They buy something, it's going down, and they come up with all kinds of excuses as to what to get out of it. You know, oh, I heard from so-and-so it's going up, you know, or oh, we just got to give this a little more time and I'm sure it's going to turn around. All kinds, as I would say, you wouldn't believe the ridiculous things I've heard grown men say. when it comes to that issue. So I tell you, I never get into a market without having a really good reason. But the first thing I'm looking at is, where do I know I'm wrong? I'm not trying to figure out how much money can I make on this, although I have to think, it's going to go, or what's the point? But yeah, my first consideration is, where am I going to know I'm wrong? Where am I going to get out? And does that make sense within the context of the market, as opposed to I'm just picking a dollar amount? So what that would also mean then, if a market, let's say I want to buy a market, but it's kind of running up already, I might go, yeah, gee, if I buy it here, then I've got to risk this much money before I know I'm wrong. I'm not comfortable with missing that much money, losing that much money rather. Okay, I'll just pass on the trade. I just won't do it. Another dear friend of mine that I worked with for a number of years, one of his expressions was, there's a rumor going around that the markets are going to be open again next week. You'll have another opportunity. So what that means, Oz, really, is if it's not the right time to buy it, leave it alone. So for me, I would say that one more thing before I ramble on too far. Managing the risk of where I get into a market, where I get out, to me, is much more important than coming up with the sort of the brainwave about what market to get into in the first place.
Well, and that takes discipline, right? And it has to be doing the ability to take a loss and walk, or to just simply, I'm not going into this trade, I'm not comfortable, and then see it go up anyways. It doesn't matter, because that's what you decide to do. In the real estate world, yes, I have my basics. I'm essentially a cash kind of guy. I like to, myself and my investors, we like income. And somebody will always tell me, you should go in this market, it's about to go up. And there's no such thing as a real estate market. There's condos, there's houses, there's townhouses, there's commercial and so on. And then there's the different kind of people that are in these markets. Right now, maybe in some areas in Vancouver and Toronto, condos are actually going down, and at the same time, the market overall may be up 15%. But how much more than in the stock market, where you have thousands of stocks and different kind of market niches? I mean, you worked in this business for, should I say how long? A long time, 44 years, my goodness gracious. And what you learned just now is that you have to be in charge of yourself, I assume. But how do you pick what market do you want to be in? Is it just gold?
I'll look at a lot of different markets. From my perspective, I'm going to look at currencies. I'm going to look at interest rates, equity markets, and commodity markets. I'm particularly keen, Ozzie, in what I call inter-market relationships. In other words, I used to describe it this way. The old thing, if you want to communicate with people, tell a story. So it would go like this. Picture, the trading floors in Chicago in the old days. You got hundreds and hundreds of people on the floors, and the guys, waving their arms around, screaming and do this and do that. But every one of them is turning around and looking over his shoulder from time to time to see what's going on in the other markets. Yeah. Okay. I mean, if you're, let's say, trading gold, and all of a sudden something starts happening in the currency market, you don't want to be the last guy to know. Okay, so all of these markets kind of interrelate with each other like this. So that's very keen to me. Now, I have noticed this, is that the relationships seem to, like the Canadian dollar this summer, when I would watch it short term on my screen, it would go up or down a couple of ticks, absolutely in lockstep with what was happening in the American stock market. On a longer term time frame, the Canadian dollar is very highly correlated to commodity markets. When interest rates were much higher, the spread between Canadian interest rates and American interest rates was very important. If Canada got down to, it was about the same interest rate as the States, the Canadian dollar would weaken. So you see these kinds of intermarket relationships, and what I'm really keen on is when suddenly it stops working. You say, oh, why did that happen? So you're always asking these why questions. Well, what about that? And a lot of the time, it's like you wasted time. You did all this research or homework, digging around about something, and go, yeah, nothing there. It's almost like the mining business. When guys would go out looking for gold, most of them never found any. Okay, but you got to go look anyway.
Yeah. And every once in a while you do find some that makes up for all. And it's like, I think in trades, if you do 10 trades and 2 are really successful and 8 are not, well, that's what you have to expect, that things change, right?
Yeah, for sure. I mean, we can go into so many directions here, but, you know, I started this new website when I left the brokerage business. And I still wanted to keep writing about markets because I've been doing that for more than 40 years. And I have, but I didn't want to just write about, although I think the gold's going up or the Canadian dollar is going down. I also wanted to kind of get in there and write about how, for my readers, maybe they could learn something. I'm not going to say, you know, do it my way or because I've got the right answer. But if somebody would be reading my website, they might get an idea. They might get an idea about, oh, I could buy this or sell that. I'm not trying to do that so much as to talk about, you know, how to trade. Yeah. And again, it's not a lesson. This is what I do. And anyway, RC, that's been kind of the purpose of the website. It's kind of going that way. My golden rule with the website is it's always a work in progress. You know, it's never going to be perfect. You just kind of keep going and do what you can.
Well, I should mention, it's victoradair.ca, but it's Victor Adair, ADAIR.ca. I think you're doing a great job. I love your trading notes every Friday. I told Victor, and I say this to my listeners very sincerely, you should charge for the information. I mean, the work that's going into everything that you talk about and the conclusions you come to, it's highly educational. Everybody should do this for any reason, but if you're in the trading business, it's a must read, victoradair.ca, and subscribe to it, no question about it. Okay, let me ask you this. We had interest rates at historic lows. Stock markets, all-time highs. Gold hit new highs and then it didn't. Bitcoin is going bananas. What do you think about the current state of affairs?
Ozzie, I'll tell you what, here's the easiest way to explain it. The environment we're in right now, and let me define that a little better. I'm very, very interested in what I call market psychology, okay? And that would be how like the herd or the mob is doing. And right now, I think it reminds me very much of 1999. During the dot-com boom, when anybody that opened a brokerage account, and by the way, we've had millions of new brokerage accounts opened this year. Now, part of that was people were at home because of the virus, you know, let's do something, let's trade stocks, and it looks like an easy way to make money. Yeah, you just had that in 1999. I remember we still had the Vancouver Stock Exchange in those days. And I saw a chart, and every one of it used to be XYZ Mining Company. Well, they changed their name to XYZMiningCompany.com, you know, and their share price doubled, okay? So there was that kind of, you could buy anything, and it was gonna go up. And I remember seeing the chart of the Vancouver Stock Exchange, and I think it went up every day that year. Yeah. You know, there was that kind of relentless enthusiasm. The NASDAQ stock index in the last 9 months, let's say from about the summer of '99 to March of 2000, when it topped out and went down, it doubled in that last 9 months. Wouldn't you know it? In the last 9 months here, the major stock indices in the United States have doubled from the lows we had in the virus panic, okay, in March of this year. You know, we've had Tesla, which I think is a bit of a poster child for the market, is up 10 times what it was a year ago now, you know. So we've had I think there's a bit of a fever in the market. You're asking me, you know, what do I really think is going on? I think there's a bit of a fever going on here where, you know, that what we used to consider were important facts don't matter anymore. What matters is momentum. And believe me, the market could double from here, get even crazier. But I think a lot of people forget, you know, because it's been a bull market for, you know, 400 years or whatever, you know, the people that are trying to enroll you in and believing it's a bull markets go on forever, but it's certainly been a bull market for 40 years. And the key event was 40 years ago, interest rates were the highest they've been in hundreds of years. And since then, for 40 years, interest rates have been trending lower and the stock market has been trending higher. And believe me, I mentioned earlier about intermarket relationships. Those two things were like that. The reason the stock market was going up as much as it did was because interest rates were going down as much as they did. So we've got interest rates at zero. I mean, maybe they keep going lower and get deeper negative. But I think the stock market here, let me say this, that top in March of 2000 that I talked about in the NASDAQ in particular, a lot of folks forget that within the next 2 years, the stock market had fallen in half. Then it rallied back up to the regular stock, the S&P 500 rallied back up to where it had been, and then it fell in half again. Actually fell in half by more than half when we had the break in 2007, 2008. So now we're miles above where we were then, and interest rates are miles below where they were then. Maybe I'm going over the top here, Ozzie. What my message has been on my website, and it's not evangelical, it's just pointing out that there's probably more risks in this market right now than folks that are new to the trading game appreciate. And I'm just saying, if you're going to be in this market here, you heard me say earlier that risk management is way more important to me than figuring out what to buy or sell. Believe me, if you want to make money over time, the only way to do it is to really manage the risk you're taking, know your risks, and how you manage your risk is what kind of a size you put on of a trade, you know, how aggressive you are, all that sort of thing. There's a lot of ways to manage risk, but managing risk is really, really key.
Yeah, no doubt about it. I mean, I think Tesla still doesn't sell as many cars as General Motors and is worth a heck of a lot more than those corporations. So from an outsider, it's almost mind-boggling. And then millions of new accounts. And if they're in and if they get hurt, are they all going to leave at the same time too? So that's why I say you have the honor of having some white hair, because you have to face these questions every single day, right? But listen, you wrote an interesting essay on Michael Campbell's Inside Edge service, where you say commodities are now the cheapest they've been in 100 years relative to stocks. Can you tell me a little bit more about that?
Sure. We have different indices in the stock market. Everybody's heard about the Dow Jones Industrial Average or the Dow Jones Transports or the S&P 500. So that's what I call stock market indices. We also have indices in the commodity market. One of the oldest ones is the Commodity Research Bureau, but Bloomberg has one, Goldman Sachs has one. But when you plot these indices, that is the case. That's where we're at now. The stock market has gone up so far, so fast. I mean, the commodities could have been standing still, and you know the spread would have widened. But we had the last commodity boom started in 2002, and it ran basically to 2011. And there were two things that were really key to that. One was that China was buying everything that wasn't nailed down. Two, the US dollar was weakening. And those two things together, and of course then the commodity market developed a momentum just like the stock market has now. I will tell you, I remember at $140 a barrel crude oil, there was a very famous analyst in Canada who was the chief guy for one of the major Canadian banks. And he was pounding the table saying it's going to $200 or $300 a barrel. You need to have somebody talking that way when the market is at the top, or otherwise it wouldn't be at the top, okay? So just the same as now, you have people saying it's going to the moon. Of course, nobody's gonna buy the stock market here if they don't think it's going up a lot more, all right? So you have these different indices, and commodities have been in the doghouse and stocks have gone to the moon. And I think the difference between those things is going to narrow. Now, it could be that commodities don't go anywhere and the stocks just come down. and that would change the ratio. But yes, commodities now relative to stocks, and we use the indices to measure, are as cheap as they've been in a long, long, long time.
Well, so okay, I can't let you go away with zeroing in a little bit. What about gold? I mean, it was up over 2,000. Now it's back in the 1800s. And what do you see happening in gold?
Ozzie, I've been involved. We talked earlier when I was in the mining business, and then I started a precious metal trading company. I've been trading gold in one form or another for the better part of 50 years. I have financed some gold mining companies. I peddled bars of gold. Used to walk around with a bar of gold in my pocket. Silver, the same thing. I sold thousands of ounces of silver back in the early days. I've traded futures markets in gold and silver for 40 years. Where we are right now, this past summer, maybe a little, well, since March until August, the price of gold jumped to new all-time highs, but it jumped about $600. The main reason the gold went up was because there was unprecedented buying of gold ETFs in the United States and in Europe. In the rest of the world, but the rest of the world didn't matter if you take the United States and Europe out. And why that was really important, because at the same time, the two biggest markets for people buying gold, at least over the past several years, have been India and China. And the retail clients over there weren't buying. So the gold market really needed this buying from the ETF crowd. Lately, and by lately I mean the past month or two, some of the ETF people have been selling their gold. And in a way, I think the thinking is, hey, if you can make $1,000 a minute in Tesla, who needs gold? You know, so it's like, and there's also the stories about people saying, who needs gold? I'm into Bitcoin. Well, I'm not into Bitcoin, and I'm not slagging it. I don't trade that market. I try to trade things that I think I know something about. The gold market right here has come down a couple of $100. It's a little odd. There's two things that over the past number of years have been really important to gold prices generally. One is the relative strength or weakness of the US dollar. When the US dollar is weak, gold usually goes up, and vice versa. The past few years, and particularly the past 2 years, a really important correlation for gold has been interest rates. And as interest rates have become more negative, by negative, this is called real rates. What you do is you take the bond yield, subtract out the inflation, and you come up with a number. That's why we hear now there's $18 trillion worth of negative yielding debt in the world. That's what I mean. So when interest rates are going below zero, that's usually really good for gold. And in the past 3 months or so here, we've had a weaker dollar. We've had interest rates quite negative and getting more negative, and it hasn't really given the gold market a lift. So, you know, I talked earlier about these correlations between markets, and I go, why is that? What's going on? And I think it's part of this, just to put it in the vernacular, it's kind of like, who needs gold is the attitude. It reminds me of that old Mad magazine, you know, what? Me worry? You know, hell, you don't need gold, just put everything in a Tesla. You know? So there's some of that. I think the gold market, particularly if the commodity market starts to rise, I think gold, you know, if you just bought some gold here and you couldn't touch it for 5 years, it would probably be higher. I don't trade that way, but some of the things that I see coming in the world, whether it's political uncertainty, the possibility of having, you know, all this debt and how are we going to deal with it, whether we go to modern monetary theory or whatever, I think there's going to be some real demand for a real asset like gold. And I'm not a gold bug. I can be short gold or long gold, but I think that, you know, for the next few years, the gold price is probably going to go higher.
Well, it's interesting you sort of went quickly by Bitcoin. There are some, of course, that feel that Bitcoin is the answer. And of course, Bitcoin also dropped 50% a couple of times in the last 10 years. So I gamble indeed, but they are out there foreseeing a terrible world happening. It's all planned, and we're going to have digital, all money is digital and so on. What do you think about Bitcoin then?
Ozzie, I have never traded it. I remember early days, you'd see that somebody had some Bitcoin somewhere and it just disappeared.
Yeah, oh yeah. In Vancouver, $108 million. The guy died and nobody could find the password. Hello.
So yeah, things like that, it would make me a little nervous. Like again, I say, I need to know what my risk is. And if I bought something and it just disappeared, I go, how do you hedge that? I also just, I guess the thing is, maybe I got not so much turned off. I was busy with other stuff. Ozzie, you know, there's way more things that I don't trade than what I do trade. And Bitcoin's just one of those things I don't trade. Maybe some folks that are keen on it would say, well, he's a dinosaur. Okay, maybe I am. You know, I've got a basket full of things as it is with currencies and interest rates, stock indices. I mean, I can trade combinations of things in the crude oil market and be very comfortable doing that. But as I say, a lot of things I haven't traded. Don't trade Bitcoin, don't have an opinion, don't own.
Well, we both have the privilege to be on the Michael Campbell World Outlook Conference coming up on February the 5th. And you have chaired it, you have made speeches at it, and I always take furious notes because you seem to have a very measured approach to how you see the future. And so maybe in the last couple of minutes, you can tell me your crystal ball as to exactly what's going to happen next year to the Canadian dollar, the US dollar, the stock markets.
Oh, I can't tell you that, Ozzie. That's behind the paywall on my site if you're not a subscriber. Folks, I have no paywall on my site. I'll answer that quickly about that. Yeah, I do a lot of work to prepare what I write, and I don't charge for it. And you know, also been doing the radio for years, and I don't get paid to do that. But you know, when I have to make my notes and put them out there, and I want them to be coherent and make some sense, it does make me think about what do I believe? You know, what do I think is actually happening? So it's actually good part of that discipline that you refer to just do that. In terms of what I think is going to happen, here's how I trade. I trade in terms of what I think might happen as opposed to what I think should happen. Wow. Okay. Mm-hmm. I mean, politically, I'm probably a libertarian. I think people should be responsible adults and do right by each other. I mean, I'm not naive. I know there are criminals in the world. I have met some pathological liars and sociopaths. They're interesting people, but I wouldn't want to do any business with them. So I'm not naive about that. But so for instance, and this is important, I think as the world becomes increasingly urbanized, it becomes increasingly socialized. And I mean socialism as opposed to libertarianism. I think as the world is increasingly urbanized, people look to the government to do more and more and more. Mm. People that get elected because the people that voted for them here, I'm going to do this for you. I'm going to spend somebody else's money for you.
Easy to work with.
Yeah, I don't agree with that, Ozzie, but I think that's where we're going. I think we're going in that direction. So there's going to be more government in your life than otherwise. I think people will still be, you know, I'll take a segue. You know, my heroes are entrepreneurs, but at the same time, my heroes, some of my heroes would be really good writers. Mm-hmm. You know, people who do the right thing and nobody ever knows. You know, that sort of thing. It doesn't have to be Steve Jobs, somebody who was famous. I think one of the things in my career that you'll learn is to judge character and, you know, to pick out people that you can trust. Mm-hmm. So I used to get people who would come up to me at conferences and say, could you recommend a broker? What should I look for in a broker? And I say, what you want to look for, I think, is somebody that you can get along with. Mm-hmm. Somebody you think values your business. And somebody you think is listening to you when he talks. He's not just going through the motions. And he's probably not going to be the first guy you meet. You probably got to hunt around a little bit, you know, get recommendations from your friends, that kind of thing. I got away from your question. You're asking, you know, what's going to happen in the future. Short term here for me, short term is, you know, maybe the next few months. I think this, it reminds me of .com bubble situation. I think we'll probably have some kind of a break in the market that may cause a few people to catch their breath and go, wow, didn't see that coming. So I'm always inclined to be cautious in terms of managing my risk, but I'd be extra cautious these days. That doesn't mean I'm going to stop trading. And if the market breaks, it's also a trading opportunity for me. But, you know, we've had, this virus has turned the world upside down a lot. I talked to Mike the other day. I was saying, I think this has been the biggest disruptor on a social level, a political level, and an economic level that we've ever seen. It's really changing the world. I think that's going to be uncomfortable. Change is always uncomfortable for some folks, but there's also, as the old Chinese saying is, you know, change and opportunity are the same word, right? So,
well, of course, that's all that background will impact what the US dollar is going to do or the Canadian dollar is going to do. It's the political environment, it's our expectations, and the fact that we seem to have decoupled. At the upper end, we're actually doing much better than we did. We have more savings than ever. We're buying real estate at the lower end. We're doing a little worse than we ever did, that don't recover. So it's a kind of a recession that is very unique in that we are, you know, I mean, we are not really going down. I mean, in all other recessions of the past, there was a marked collapse in everything. Not this time. The real estate is almost the same, and the stock market is rising like crazy. So.
Well, there's been a lot more money injected into the system, but on that issue of savings, I've got, again, I tell you, I pay attention to psychology. I wonder if, and people aren't monolithic. I mean, we've got the baby boom generation. Now the millennials apparently there's more millennials now than baby boomers as we start to die off. And there's this thought that in demographics that the millennials are now going to do what the baby boomers did 30, 40 years ago. In other words, you know, go out and buy houses, spend money, blah, blah, blah. I wonder if there hasn't been a little bit of a wake-up call, even at the subconscious level, where people are saying, you know, we don't need that thing. Let's just hang on to the money. Who knows what's going to happen? Maybe we ought to just kind of, you know, have a little more food in the pantry, this and that, however that manifests in your life. But when I hear the savings rate go up, what I'm thinking is, yeah, people are saying, hey, I don't want to be spending every cent I got and everything's about the monthly payment and I got no cushion. So that's one thought on it.
And some of them have felt it, you know, that all of a sudden, we don't even have enough money for the next 2 weeks. We're going to make a change, right?
Exactly.
Benjamin Tal's saying we're going to head into a winter. Benjamin Saul is with CIBC. He says we're going to head still into a dark winter. We have to get through still some troubled times, but he feels that the second half of next year is going to be better. What do you think? We're going to be better eventually?
Ozzie, I sure hope so. I mean, I am a glass half full kind of a guy. I can always see, you know, the brighter picture, but I've done some writing on this, and believe me, I read a lot of research, and a lot of the message I see out there is exactly what you were just saying. And I'm not putting anybody down, okay? But I hear a lot of folks say, don't worry about the temporary troubles here. Yeah, there's people getting laid off and there's businesses are failing and some of the forbearance that's been happening, or, you know, people are going to get called, they got to pay the rent now, they got to do this and so on. But just look ahead. Don't worry about the short term, look ahead and everything's going to be fine. I think people have looked ahead, and that's why they've run the stock market up as much as they have in the past couple of months, particularly since the end of October, and particularly since the vaccine news came out. I mean, the Dow Jones in the overnight market, when they announced that, Pfizer made the initial announcement, I think we jumped something like 2,000 points like that, you know. So a lot of that looking ahead to the rosy future is priced in. It's already, the market discounts that. So, and that's how I think I've been kind of trading that way lately, and small size, making bets that the market's just a little too full of itself, and I've been losing a little money. Nothing, you know, nothing in big size, but I've been betting against that, what I would think is just a bit of a too over the top bullishness.
Well, and then that's what makes the world go around, is to, you know, put your chips on the table and play the game. I mean, when people ask me about real estate, did I forecast this tremendous turnaround? I honestly didn't. I do believe long term, because of all the money we're printing, we will have higher prices, but I did not expect that to be within 2 months of the downturn. And so here we have a world that is different. It's upside down. People go out of town. They've learned, the old guy turned on the computer. Oh, that means if I push this button, the stuff is here tomorrow morning. Somebody delivers it, right? Maybe I should go to Parksville. Maybe I should. I mean, Vancouver Island sales are up 70% in November. 70. In Powell River, 200%. I mean, you know, it's not just the downtowns. In the United States, Redfin reports that they have over 50% of the deals the agents do countrywide are higher than the asking price, and they're all in a bid situation. So it's sort of it's just everybody's out there maybe getting a little safe, being a little scared, and that's why you get the big money. I should mention, though, that you don't get the big money for your new setup, which I think you should because of all the work you're doing in it. But people should really go to your website. It's a new website. It's victoradair.ca, not .com, .ca, and read your stuff. I think if they did nothing else but on a Friday read your trading notes, they would get a heck of a lot more educated about the stock market and the world as you see it. And I want to thank you very much for joining me here today and talking to me and sharing your accumulated pearls of wisdom.
Ozzie, you and I have been friends for a long time. It was my pleasure to be part of your show, and thank you, sincerely, thank you for having me on. It was great fun too.
Thanks for coming. Take care, Victor.
You bet. You too, Ozzie.